Hello traders, and welcome back to day 22 of our 30-day trading podcast journey. Today we are going to explore a topic that is often overlooked, but it is one of the most powerful tools for personal and professional growth in trading. That is the self-reflection. Self-reflection is the practice of looking back on your actions, decisions and emotions to understand what went well and what didn't, and how you can improve. In trading, it's not just about making good trades, but also about understanding yourself as a trader. By reflecting on your experiences, you gain insights that help you evolve and refine your strategies over time. In this episode, we will cover the importance of self-reflection, techniques to incorporate into your trading routine, and how it can drive consistent growth. Let's dive in. Let's start by looking at why self-reflection is such an essential component of trading success. Recognizing patterns and behaviors. Self-reflection allows you to notice patterns in your behavior and decision making, whether it's a tendency to exit trades too early, avoid certain types of trades, or take impulsive risks. Self-reflection helps you identify these recurring habits and address them. Learning from mistakes without emotional baggage. Every trader makes mistakes, but those who don't take the time to analyze them often repeat them. Self-reflection provides a structured way to look back at mistakes objectively without any judgment. By understanding why a decision didn't work, you can make better choices in the future. Building self-awareness. Trading isn't just about the market. It's about you. Being aware of your strengths, weaknesses, emotions, and tendencies can help you stay disciplined, handle losses better, and become a more consistent trader. Now, let's talk about some techniques to make self-reflection a part of your trading routine. These strategies are simple to implement but highly effective. Maintaining a trading journal. A trading journal is one of the best tools for self-reflection. After each trading session, write down the trades you took, your entry and exit points, your reasoning, and the emotions you felt. This record will give you something concrete to review and analyze, helping you spot patterns and make improvements. Use end of week reviews. At the end of each week, take some time to review your trading journal and see if there were any repeated behaviors or decisions. Ask yourself questions like, was I consistent in following my strategy? Did I make any emotional trades? What would I change if I could do it again? Self-reflection goals. Choose specific areas to focus on during your reflections. For example, one week focus on your entry strategy and the next week on your exit timing. By breaking it down into focused areas, self-reflection becomes less overwhelming and more actionable. To make self-reflection even more impactful, here are some key questions you can ask yourself after each trading session or during your weekly review. Was I following my trading plan? If you didn't stick to your plan, reflect on why. Was it due to an emotional response, overconfidence, or fear? Identifying the reasons for deviating from your plan can help you avoid doing it in the future. What were my emotions before, during, and after each trade? Emotions play a big role in trading, and understanding how they influence your decisions can be a really game changer. How did I respond to market movements? Sometimes unexpected price movements can throw us off. Reflect on how you reacted. Were you able to stay calm and follow your strategy, or did you panic? What went well today? What could have been better? Focusing on both positive and negative aspects of the day can give you a balanced view. Self-reflection is only valuable if it leads to improvement. Let's look at how to turn your insights into action. Set small, measurable goals. For example, if you notice that you often exit trades too early, set a goal to follow your exit strategy without cutting it short. Create a personal checklist. Based on your reflection, create a checklist of reminders to keep beside you while trading. This can include notes like stay patient or follow your exit strategy. Checking in with yourself before each trade helps you stay aligned with your goals. Review your progress regularly. Set aside time every month to review your journal and notes to assess your progress. Finally, let's talk about the long-term benefits of self-reflection in trading, building resilience and adaptability. By regularly reflecting on your trading experiences, you are constantly learning and adapting. You will start recognizing patterns faster and become more resilient in handling the ups and downs of the market. Achieving continuous improvement. Self-reflection promotes lifelong learning and growth. Each reflection session brings you one step closer to mastering your strategy and your own emotions. Developing a personalized trading style. Over time, self-reflection helps you understand your unique strengths and preferences, allowing you to develop a style that aligns with who you are as a trader. And that's it for day 22. Today we have explored the power of self-reflection and how it can help you become a better trader over time. Remember, every reflection is a chance to learn, grow, and make improvements that will pay off in the long run. Tomorrow, we will dive into another essential topic, the importance of finding your trading style. From day traders to swing traders, there are many approaches, and discovering the one that fits you best can be a game changer. Thanks for tuning in, and I will see you back here tomorrow. Until then, keep reflecting and keep going. Thank you, everyone.